Joe Cusick at the Cusick Group joins me now for Stocking Up. Good to have you on the show, Joe.
Thank you, Angie.
All right, let's start by talking about the VIX. The VIX is relatively low. What does that signal to traders and investors?
Yeah, well, typically when you see the VIX moving, that's some uncertainty, some fear. That's why they call it the VIX index. What I saw earlier this week, and we talked about this, was on Tuesday and Wednesday. I actually saw when the market was going up, specifically the S&Ps, the VIX started to go up. They're non-correlated asset classes. Usually when the market goes up, VIX goes down. That was a sign going into Thursday that I was a lot more uncertain than I ever was as far as market being a little heavy. It did go in the red on Thursday, and if we still see this action where the VIX continues to go up and the market is not turning its course, that could be a sign for traders to watch out. That's a little red flag, of course, on the short term right now.
Joe brings us some hot stocks today, including Visa. The options market seems to be predicting, Joe, that Visa has the ability to move higher. What do you think about that?
By the end of the year, we're going to see rate hikes, and into 2018, we're definitely going to see some rate hikes. Now, with that being said, the interesting activity I saw was not front month or even in the next 3 months. This is in January 2018. The 120 calls traded and the 110 calls traded about 50,000 times. Now, again, that activity was on the tail end of Thursday. Saw a little bit more on Wednesday and also Thursday. So I want to keep an eye on that action.
Because that's a long way from where we are right now with Visa.
And the stock trading at $80. These are 110s, 120s.
So these people think that this stock could trade as high as $120.
Well, and at the bare minimum,
in 2 years.
Exactly, and that's the critical point. And I think every viewer out there.
For investors.
Well, this is the way that investors should utilize leaps. They're using them as proxies for the stock. I mean, this notionally allows you to have the right to buy stock about 1 million shares, 500,000 at 110 and 500,000 at 120. Utilizing these options, they're cheap as far as volatility is concerned. They have a lot of time left. They're not going to decay very quickly. And if the stock does move because the environment and the interest rates or the financial markets or the credit markets really starts to perk up, Visa's going to benefit. This is an interesting play.
Let's talk about AT&T. What do you see happening there?
Well, telephone, it's one of those stories. You always have a little volatility around the telecommunications sector. It's been a little quiet, grinding up to the upside. Stock's trading right around that $39.40 level. The July $38 puts traded around 5,000 times yesterday. It was a very interesting trade because there are earnings on the 21st of July. That's right during the expiration cycle of these options. It looks like there's a potential hedge being put in place. And with the action that we saw on Thursday, where the market was a little heavy, and we still continue to see globally too, that there's some uncertainty.
On that one, they're a little nervous about AT&T, so they're hedging the trade potentially. Let's move on to one more stock, Cisco. What do you see happening there?
There was about 2,200 on Thursday of the $23 calls that are expiring in January. The stock's trading at right around $29, right around the close of yesterday. What's interesting about this activity is that this is basically trading at parity with the market. You have about 190 days left until expiration. This is a strategist that is using the deep in the money, longer term options as a proxy for the stock. It's basically going to follow the stock almost penny for penny, not completely to the upside. It will also to the downside. But the point being is that they only have to put up $6 per contract versus buying the stock outright at $29.
Thank you. Thank you for helping us.
You're welcome.